Alright, hello everybody and welcome to the weekend analysis video of the week ending 20th of April 2018. Those of you that are new to the site, welcome aboard. And our standard chart settings, which we use in all of our analysis videos. We use the daily chart on the left hand side and the weekly on the right. We use three moving averages, the 200, the 50 and the 20. The 200 is in red, the 20 is in blue, and the 50 moving average is in yellow on both time frames. Okay, so looking at the SPY, those of you that have seen Thursday's analysis video, I was anticipating and waiting to see if we would be getting a topping tail on the weekly chart, and it looks like we do have a topping tail. The S&P 500, the SPY, has topped out practically at the 20 MA, which is also a gap fill area here, which we can see, and it's also a 61.8 fib retrace level. So that's the gap here, that's where we topped out, and we closed below the 50 MA, which is still more or less pointing downwards. It's started, or it's attempted to turn upwards, but with this action today, if we continue down here, this will start to move lower once again. Now there's perhaps one possible saving grace for this market at the moment, and it's the fact that the 20A, which I've been watching like a hawk over recent days, has now begun to turn upwards. So really this is the last line in the sand. As long as we stay up here, the market does have a chance to bounce off that 20 MA and perhaps start heading higher again and possibly negate this topping tail on the weekly chart. We have to take it day by day. All of the trades we're doing, we're trying to close out as quickly as possible any longs that we've got in terms of stocks, because the moves are not lasting very long. But we'll come on to those individual stocks that we close out of this week slightly later on. I just want to look at the other indices. So let's look at the DIA. Oops, let me punch it in correctly. Okay, so very similar pattern. We've got a topping tail. We've topped out at the 20 MA, and as we saw on the SPY, the gradient of that 20 MA has started to taper off, which possibly is telling us that this market is topping out. Again, perhaps the last line in the sand is this rising, or what is now beginning. It's now starting to rise at 20 MA. If we hold this 20 MA, we could start to turn higher again, but we have to take it day by day. Let's look at the IW and the Russell 2000. So this looks the strongest of all the indices. This isn't really a topping tail, although it looks like a hammer. On the weekly, we're still above the moving averages. The 50 MA has already turned higher, and so has the 20 MA. So I'm not taking it for granted that these markets are just going to flush lower. Again, we have to take it step by step. The Nasdaq, the Qs, this is a topping tail, and we've closed below the 20 moving average, and again the same story. So we've got to take it one day at a time. Now let's go back to the S&P 500 on the SPY. I'm going to now turn to the hourly chart, the 60-minute chart. This is a very important chart. Look at this, the 20 moving average, which since the bounce of around the 2nd or 3rd of April, the 20 MA, the blue line, has been climbing quite steeply, and it topped out here on Thursday, and it has now started to turn lower. So this would indicate, as long as we remain below here, below that descending 20 moving average, prices will more than likely be heading down. Now, I'm not sure if I'm going to jump on board short straight away at the open on Monday. I want to see, perhaps we may get a bounce. I want to really sort of fine tune this entry. It may even be a day trade that we go for, or perhaps a trade lasting 2 or 3 days. In an ideal world, we would have this 20 MA continue lower over the next few candles. Price may gap up at the open, and then on the first candle at 10 AM Eastern time, it may close below that 20 moving average. So let's say we gapped up here, for example, and then at 10 AM we close below that descending 20 moving average, then the markets will be heading lower for the rest of the day. So let's wait for the setup, let's wait for the trades to come to us, and let's take it step by step. Now let's just go back and see the trades that I closed out of. The first one was Exxon. So we got in around here, Price was oversold on the weekly chart, and we've now reverted back towards that 20 moving average. And on Thursday I closed up not quite at the high, but more or less at the close of the day, and I said, look, if the S&P 500 is topping out, I don't want to be in this. It's had a good bounce and it's near enough my target, which was around the 200 MA. So we made around 33% profit on that. BBY, which I closed out for a break even. Really with hindsight, I should have closed it back up here, but that's easy to say, knowing what's happened, and it came straight back in. We don't take any risks. I just pull the plug at just above break even. So, this market is a very, very short-term market. This was a good pattern, beautiful consolidation above a steeply rising 20 MA on the weekly chart. Beautiful bullish pattern. We've got a nice tight arrangement of candles and a rising 20 MA, and up it went. However, in this market, we've got to grab money off the table quickly. Moving on, FCX, which we took, I believe it was 67% profit, very similar pattern to BBY, rising 20 MA on the weekly chart. We can get rid of this now because we're not in it. And it made that move, and I said, with this market being on tenterhooks, I'm just going to grab the money, and we got off more or less near the high, near the close on Thursday. We made 67% profit on that, so we've got to take it step by step. The other trades that we're in, Snap, we got to move higher. We're up about 20% on the trade at the moment. I'm hoping for one more day where we have a good rise, hopefully a good and respectable rise, and then we'll grab the money off the table for whatever it gives us, and that will be another profit. Looking forward, what else do we have? We are long gold at the moment. We're still above the rising, or sort of, it tapered off, but it's now starting to rise again, 50 MA. So I'm still in this. I'm a bit disappointed that it closed below the 20 MA, but nevertheless that's still rising. And looking at the weekly chart, this is still in an uptrend. So hopefully in the coming days this thing will start to turn around and move higher and break out to new highs. Pandora, this is something that we are still in, and we're just waiting for one more push higher. Again, as I've mentioned in previous videos, stocks that are really, really beaten up on any pullback in the SPY, these stocks will remain largely unaffected. Of course, they could pull back, but with this thing building pressure, we've got this nice tight arrangement of candles. Look at all these candles. They're very small candles. That's telling us that the institutions are slowly accumulating. Hopefully we will get one big push up to the 200 moving average, and then we will be able to get out of the trade. Another trade we're still in, Teva Pharmaceuticals. We are short this stock at the moment via puts, although we have a tight band of consolidation sort of going sideways and a 20 MA which is starting to rise. Take note, we are stuck below the descending 50 MA on the daily chart, and this is actually bearish. Although the rising 20 MA would normally be bullish, it could start to taper off, and as long as we remain below this descending 50 MA, I'm expecting this stock to go lower, especially as the market is more than likely going to head lower, certainly in the next few days to begin with. Also, the fact that we have red candles, every candle seems to be red, meaning that the stock gapped up or opened at the high of each day and it ended lower, is also a bearish sign telling us that the Teva will be heading lower shortly. I'm also still long HK. We've got the May 5 call. This is still building up beautifully. Sideways consolidation. 20 MA which is starting to turn higher, and we are very oversold on the weekly chart. Yes, we have a down pointing 20 MA. However, we are so far below it that this thing should be reverting back to around the 650 level, coinciding with the 200 MA. And if we look at spot Crude, that's still doing well and in an uptrend. Let's take a look at the XLE, which is the ETF, which tracks the oil companies in the energy sector. That is still doing reasonably well. That possibly could have some more upside, which will of course bode very well for our HK, which is so oversold at the bottom of the chart. This thing really should get, over the coming days, a good boost higher. The other oil stock we are in, ETE, very similar story, which has already started to run. I think we got in around here last week on Monday at the beginning of the day. It's made a nice move higher. I'm just waiting for one more push. Hopefully we'll get up to the 200 MA and I'll be looking to close the trade on that. Alright, so let's go back to the main indices. So yes, looking at this, the market could be topping out here. Now what I want to do is ascertain how far lower we can go, but also what I want to do is look at some key stocks just to get an idea of what the overall market is doing and what individual sectors are doing. So to begin with, let's look at some ETFs. Let's start off with a financial ETF, the XLF, which this of course covers all the big banks. We can see the first thing of note, the weekly chart, the 20 MA is starting to taper off somewhat, and we are stuck underneath this 20 MA on the weekly time frame. Looking at the daily time frame, we have a descending 50 MA. That is really bearish. Last week, JP Morgan announced earnings. The financial stocks gapped up and then basically sold off for the rest of the day. The fact we're stuck below this 50 MA is boding lower prices, perhaps in the very near future, on the financial stocks. Let's look at the stocks. This is the semiconductors. This has been the market darling, really. This thing took off since the beginning of 2016. The whole sector rose from $76 and to its peak of only a month ago or so. It rose 168%, which is spectacular performance. Looking at the weekly chart, it held that rising 20 MA. However, this is a very bearish development. We've now closed back below the 20 MA and it's leveling off, and you can see we are stuck here now underneath that 50 MA. So this is perhaps looking quite bearish. What I want you guys to do is, those of you that are full members, is please go back and watch tutorial 7, which will tell us how to identify short setups. Let me just go to that page now. So if you come onto the site and go to tutorial videos, that will bring you to this page. Just scroll through at the bottom and all the way to the bottom of the page, click on next, and that should take you to tutorial 6. Scroll down, tutorial 7, shorting and the magic of the daily 50 MA, and this goes through perhaps 30 or 40 stocks, showing you how to identify stocks that can be shorted or stocks that are going to be dropping in price, and we can profit via the use of options. So I urge you all, please go back and watch that video, because it's those techniques that we learned in tutorial 7 that we're going to be able to apply now to the market. Because by the looks of things, this market is topping out. Don't be surprised if in the coming months this market turns into a full bear market. I don't want to scare anybody, because we've got to take it one day at a time, step by step. I don't want anybody to jump the gun. However, just the way the markets are reacting, yes, we got a spectacular bounce, which we caught on the, I think it was the 9th of February. We came back down, we went back up, and we're back down. We made a bit of a mess here. Here we seem to be topping out, and the 20 MA is tapering off. So again, let's take it step by step, day by day, but I wouldn't be surprised if this, with the fullness of time, over the rest of 2018, turns out to be a bear market. Right, let's look at some other key ETFs. So in order to do that, we're going to slide through the Spiders Select ETF, range of ETFs, just to get a snapshot of what's going on in the market. So this is a consumer discretionary sector, rising 20 MA. We've still closed above 50 MA on the daily chart, starting to move lower. So there is still some weakness there, very similar to the SPY. The consumer staples has absolutely been battered, stuck below this daily 50 MA, which is moving lower, and the weekly 20 MA is now pointing lower. So again, weakness there. The strongest sector certainly for the last couple of weeks, has been the energy sector, with oil doing well. The energy sector has, of course, shown a lot of strength. However, this move, is quite steep. I won't be surprised if we have a pullback on the cards. Nevertheless, this is where there is strength in the markets. Financial ETF we've already talked about. We're stuck below this 50 MA. If we go sideways for another few days, this thing will be heading lower. Healthcare also stuck below the 50 MA, and look at this. The 20 MA on the weekly chart has already fully tapered off and is starting to go lower. A couple of weeks ago, at the end of March, if you look at the box with the blue figure, 84.35 is what the 20 MA was, and it's now 84.23, so it's starting to turn low, and we have what's you could say is a topping tail on the weekly chart as well. So healthcare companies is something we will be looking at as well to short either this or individual names. XLI, this is the industrial sector. We've topped out at the 20 MA and we're above the 50 MA, so there's a bit of strength there. Materials, again descending 50 MA, and we've not quite closed below it, but there's something to be aware of. Let's see what else we've got. Technology sector, topping tail on the weekly chart. The 20 MA is still rising on the weekly time frame. However, we've closed below. So this is something to look out for. Utilities, we seem to have topped out at the descending weekly 20 MA. Any close below the 50 MA and this thing will be a short down to the lows. What else do we have? Okay, I think that's it for the Spider Select ETFs. Let's take a look at some individual stocks now. Alright, so let's start off with Facebook. Descending 20 MA on the weekly chart, indicating downtrend has commenced, and we are seem to be stuck below this descending 50 MA on the daily. Look at this trend line. I'm connecting the lows from September and February, and we are also stuck under this trend line. So Facebook really should start to come in, especially if the Nasdaq and the other main indices start to pull back. What's more, remaining under this 50 MA, which is pointing downwards. Also, the 20 MA is pointing downwards, albeit it started to turn upwards. But again, any weakness, this thing should go lower. Let's look at the hourly chart to see what's going on there. 60-minute 20 MA has started to turn lower. So this thing should be going down with the market. Next thing, Alibaba. Look at this, 20 MA starting to taper off. And look at the credibility of these moving averages. This is what the institutions are watching, and this is where they topped out the stock and they took it lower. Again, stuck below the 50 MA. Again, a reminder, go back. I suggest that you go back and look at tutorial 7, because it will explain how to identify short setups. Okay, so Baba looks like it's topped out right here. Johnson & Johnson, this is a big blue chip stock, again descending 20 MA on the weekly chart, and we're now closed below the descending 50 MA. There is a lot of weakness out there. These are big names. These are big names, and there is a lot of weakness. So I don't think we're out of the woods yet. Just the way the markets are unraveling each day, it's just telling me there is a lot of weakness out there, and things will likely be heading lower. AT&T descending 50 MA, we're below it, and the moving averages on the weekly chart, 20 MA starting to turn downwards. What else do we have? Boeing. Okay, so this is quite a strong stock. 20 MA still rising, and we're consolidating in a bullish manner. So if the markets do get a bounce, I'll be looking to get in on this, but I'm waiting for the trade to come to me. If, for example, we bottom out here and we get a bottoming tail and we hit that 20 MA and then bounce higher, and the 20 MA on the hourly chart starts to turn upwards, the blue line here, then I'll know that it will be safe to go into things like BA Boeing. Verizon, 20 MA just about to start turning lower, descending 50 MA. We've closed below it. Verizon, I think, will be coming down certainly to this low initially, and then depending on what the indices do, it may well head lower. Coke, again, look at all these big names. A lot of the stocks in my short list are indicating downside. We've topped out at that weekly 20 MA, and we've just closed below the descending 50 MA, this yellow line. So Coke should be a good short down to the bottom here. Citigroup, same story. Look at all these stocks. Now I'm just going to cycle through more quickly now, and I'm not going to talk too much about what we're seeing because the picture is exactly the same. We're just stuck below the daily 50 MA, and we have a 20 MA that's turned downwards. This is at a good level of resistance, descending 50 MA on the weekly chart, and we're into the 200 MA. So this stock should be coming down very shortly. Similar thing with Disney. Now Netflix, this is an interesting one. If the market does have a deeper pullback, this thing should come back down here initially to the gap fill. This has been the market darling really since 2000 and the breakout in late 2016. It went sideways for a good year or so. However, this has been the market darling of 2017 and certainly for, well, most of 2018 as well. However, if the indices head lower, this thing will come straight back in. Money will start to come out of this. SAP we talked about. That's at a good point of resistance and it's coming back in. Any close below the descending 50 MA and the stock should be heading further down. McDonald's, a very similar setup as we saw to a lot of other Dow stocks. We've now closed below this descending 50 MA. 20 MA is turning lower. So again, this stock should be heading lower. What we want to do is match all of these trades and any short setups we're going to be taking. We want to match it up with the main S&P 500. Before I look at Gilead, let's look at the IBB, which is the ETF, which tracks the biotechs. So we did have a rising 20 MA on the weekly chart, which is now tapered off and it's sort of chopping around, and it looks like it's leveled off completely. And these indices are weak. We're stuck below this 50 moving average. Let's go back to Gilead. Same story here. Baidu looks like we've topped out at the 50 MA and descending weekly 20 MA as well. Vodafone looks like it could be a reasonably good short here. We still have a descending 50 MA, although it's tapered off a little. We're into this gap window, pivot high, weekly pivot high, and we've topped out at the descending 20 MA. So this thing I'm going to put into my buy now list, possibly to enter on Monday. Vale, this is a resource stock. The resource stocks have been holding up very, very nicely, indicating they could go higher, providing the market doesn't have a deeper pullback. So there is strength out here. This is an energy stock. Moving on to Antm Anthem. This is a healthcare provider, descending 50 MA. We've closed below it, and the 20 MA is tapering off. Again, with all of these stocks that we're going through, make sure you know when earnings are. As a general rule, I want to be out of trades before earnings. I don't want to hold into earnings because it's a 50-50 which way the stock will go. AGN looks like it's a good setup. Let me get rid of this. We've closed below the 50 MA. It's descending, and the 20 MA is also descending. So this stock could be heading far lower. Let's take a look at the monthly chart. On the right hand side, it's in a steep downtrend. Let me cycle through some more. Okay, Wind Resorts. This is a very strong name, rising 20 MA on the weekly chart. It's in an uptrend. So on any bounce or any indication that the SPY will be heading higher, this should be a good long, hopefully for upside towards that double top to begin with. Okay, this is something I've mentioned in previous videos last week. FXI very, very weak, stuck below 50 MA, which is descending. 20 MA on the weekly chart has tapered off and will start to head lower, and we're stuck now below that 20 MA as well, which is also pointing downwards. We've hit the 200 here. This thing really should start to gain traction to the downside, especially if the S&P has a deeper pullback, as it's looking like it will may well do this week. Same story with EEM. Again, 50 MA pointing downwards, 20 MA pointing downwards. We're now below it. This thing should head really down to the 45 level, and look at that 20 MA, which is starting to taper off. And as of the close yesterday, we got a topping tail on the weekly chart. Alright guys, so to conclude, S&P 500 will likely continue this pullback. The last line in the sand is going to be this 20 MA. Do we hold a 20 MA? Do we get a bottoming tail there? Do we bounce off it and then start heading higher? Or do we work our way down and close below and then possibly go back and test the low of April the 2nd? It's better not to have an opinion. Don't have an opinion as to where the market is going. Just let the trades come to you. Take it one day at a time. Alright guys, we'll leave it there. I wish you all a great weekend, and if anyone has any questions or if anyone wants to talk about stocks or ask anything in particular, let's by all means chat over the rest of the weekend on the Facebook page. Thanks again guys, and catch up with you very soon.